recording this. You guys can see my screen, right?
Yeah. So we had 26 people in here. Not bad.
All right, cool.
Not bad at all.
So this is recorded. It's going to be posted on YouTube after. It is Sunday, June 28th. This is not the Sunday Market Blitz. That's going to be at 8 p.m. today. This is actually
Wow.
just a webinar that we wanted to do on signals. We had all you guys ask your questions, any questions you guys have about signals. So we wanted to just put this together for you guys and kind of just go through them. So all the questions are on the screen, right here. And we're pretty much just going to get started. You guys, for any reason have another question, just put it into the chat. And pretty much just go from there. So let's start with number one, how to set TP and when to enter. Boom. So how do we set a TP and when to enter? Obviously, for me and Nick, there are certain things that we're looking for entries every single time. And we are going to execute on those when they present themselves, when they shake out. Religiously, we're going to go through, we're going to enter the market whenever it fits our plan. So, how do you set TPs, when to enter? I could say
There's a few rules based on TPs too, though. Based on a TP, you should never get in a trade that, from our strategy, should be less than a 2-to-1 risk reward. So that means we're risking 1%, aiming to get 2%. Anything less than that, we're not really interested in. We want highly probable trades that are gonna make sense. That are gonna give us at least double, the profit of what we're risking. So, and then also I'll choose TP levels based on areas of confluence. So oftentimes, I'll be using if I'm taking a long position, my TP will be at a key resistance as well as a fib level, negative 27% fib level. If that lines up with a key resistance level, that makes a lot of sense for a TP, and so on. So you want to have, just like when you're entering a trade, we're looking for confluences. We're looking for a lot of factors coming together that kind of, give you confidence that the trade is good. Same thing goes for a TP. I'm looking for an area where, there's a lot of things coming together, where there's a lot of, logic behind price action reaching that level, and choosing levels that way. That's how I'll pretty much choose a TP.
Yeah. And, like I said, if you guys, we do live sessions Sundays, Tuesdays, Wednesdays, Thursdays, and we go over how to set TPs on those. So if you guys are in signals, even if you're not in signals and you want to learn about setting TPs, we go over them almost every single session. So let's go.
Yeah, so definitely join in those. We'll go over literally like 10, 20 like trade setups or scenarios rather, 2 on each pair, whichever way it could go. And we're giving you, zones where the price could hit, zones where you should put TPs, stop losses, etc. So there's so much just raw value in those live sessions alone. And again, we do it 4 times a week, including the Sunday Market Blitz. Okay, what's the next question though? Does it matter?
Go ahead.
What's that? Okay. Does it matter if we catch the signals a little late? It depends. So if I give out a trade, let's say, and then you get it 5 minutes later and the trade has moved 20 pips into profit, then you've missed the trade, yes. I mean, you can re-enter if it comes back for a retest or something. And if you've gone through our course and you know our strategy, you should know that, especially if you've been on some of these live sessions as well, you should always know that you can re-enter on a retest, or if price action comes back to that area. So that's one way to do it. Or, if I put out a trade and, you see the trade 5-10 minutes later and it's still in the same area, like almost at the exact same, pip, then yeah, you can go ahead and take the entry. But, if it has moved quite a bit into profit, and you be aware of your emotions. If you're feeling like you're missing out, like you're like it's in profit and you see that people are making money and you're missing out, the trade's already missed. And in that sense, at that time, you have to step back and practice good discipline and say to yourself, I missed a trade. I'm not going to fall into FOMO, fear of missing out, and jump in this trade late and potentially screw my entire risk to reward and, potentially lose money. So that's what you want to do. Exactly. FOMO, Andy. That's exactly right. So,
yeah. So, yeah, good question. To put it simply, if we're in a downtrend, we're going to enter on lower highs. If it is at a lower low, do not enter. Wait for the next lower high. If it's in an uptrend, we're going to enter at higher lows. If it's, made a new high and you came into the signal late, just wait for the next higher low. We teach you we teach you how to look at structure for a reason. You guys should be taking entries if you're late with the same principles, trying to find the next best entry. There are always going to be multiple entries, or not. I wouldn't say there are always going to be. Sometimes it will go into like profit fairly quickly, and there's no turning back. But like right now in NU, it has presented multiple different entries, even if you miss the first one. So we do have our premium signals chat. I will say we have our premium signals chat that we will update, if there's an opportunity to re-enter. So keep that in mind as well. So number 3, what advice would you give someone who's been blowing their account?
Okay, so this obviously, for me, if I saw somebody blow an account, it would probably, the first thing I would try and address is the risk management. What are you risking per trade? How many trades are you taking? Like, because there's a lot that goes into it. If you have a $100 account and they keep blowing the $100 account, obviously they're not following risk management. And if they blow the account in 2-3 trades, that's a clear sign that risk management is way off. So I would tell them, get off a live account, get on a demo account if they're not already. Risk 1 to 2%. See it from a percentage perspective, not pips. You want to approach the market and treat it like a business, because like that's just someone who's just essentially looking to make money quick, probably, who's blowing the account quickly over the course of only a few trades. It more or less comes down to risk management, focus on a couple pairs, I would say, and then kind of come up with some sort of trading plan. Because that, if you're blowing accounts, consistently blowing accounts, you probably don't have a plan. You don't have good risk management. You don't really have any sort of strategy. And you're kind of you're just at a loss. You need some sort of structure in your trading. Angela, what would be the best advice you would give someone who keeps blowing an account?
Yeah. And later in the session, we'll talk about, someone asked about how many accounts have you blown, blah, blah, blah. So I would just say that you need to risk 1 to 2%. You gotta have the vision to trade a $200 or $500 account with 1 to 2%. I know it's like a 0.01, and for the longest time, I also was like, oh, like I get no fulfillment out of making $1, on the account. But that's not, with the way things are now, with FTMO, with the ability to get funded by not even FTMO, other companies.
Mhm.
You need to become consistent to get funded. So don't worry about flipping your account, that $200 account, turning that to 8,000. It's not realistic. Everyone that posts that it's
And
not.
it's unnecessary. Frankly, it's very unnecessary.
Yeah, it's on, because I've gone through and I learned from someone. I found Forex on Instagram, and I learned from somebody on Instagram, and I went through all of these growth periods where I thought things that weren't true, like that was the way to go about things, to put $5,000 and try to turn it into 30,000. Like, guys, this is the foreign exchange market, the most volatile market in the entire world. You're leveraging positions, you're using your margin trading. Go for 1 to 2%. That is how you stay in the game. That you can't risk 5. We went over this. You can't risk 5%, 10%, take only 3 losses in a row. All of a sudden, you're down 30% on that account. That $1,000, you're now at 700, and then 2 more losses, you're down to 500. You're down 50%. That, like, psychologically, especially in the beginning, whenever, we compared it to having a $5 million account. Would you guys risk 10% on that account to literally lose $100,000 on one trade? You know what I'm saying? Or $500,000 on one trade. It's the same thing. Treat that $200 the same way you would treat 2 million, guys. Treat it the same exact way, because it's the only way that you guys are. It's the professional trading, realistically. Every book that you'll read, and I read this and ignored it, and I will just say this to you guys. Every book you read will say risk 1 to 2 to 3% every trade. This is what they do. They're not lying. You know what I'm saying? Like, this is the facts. The more that we can bring this to light, I think with FTMO and everything, gives us the opportunity to see what's possible by just doing that. So
Absolutely. Yep. That's true.
So yeah,
We're going to continue to prove that to you guys, that it's all about just developing the skill set. You can always apply for funding. You don't have to worry about, $500, $1,000 turning into, hundreds of thousands. If you can prove you have skill, you can get access to hundreds of thousands of dollars to trade and make an extremely good living. So guys, that's why it's just, again, really important to just focus on the skill rather than, blowing up your account thousands of percent. So
there's a difference between marketing a $1 million account flip like these people do, and trading. Trading's a whole different game. All right, so let's go to
Very true.
number 4. How can you tell when a trade is going through a pullback? This is a pretty good question. I can take this one to start off. When it really just comes down to how do you determine structure? For me, I determine structure through the moving averages as they cross. They're making a new low. They've broken a significant level of support. That pullback is now the momentum. So as the moving averages cross again, and we go into this a lot more in depth in our webinars in the course, but basically that pullback is that first moving average cross as we're pulling back, where the momentum has been red over blue, or where our moving averages has been bearish, and it's pulling back, it's coming bullish. Until it breaks that previous lower high, that previous point of structure that was formed, that is just a retracement, guys. And the market is never going to shit unless like something significant with news happens, like coronavirus. The market is never going to go just to your target. We always talk about this. The market is going to range. That's why when we get into trades in the signals and we're near the entry, and there's a lot more to explain about this, but when we're near the entry and we don't exit until structure is broken, because our rules for entry was to find that lower high. So until that lower high breaks, realistically, we have accepted that position. That position is already on. Our risk is on. We're not going to exit because our rules and our plan are determined in the sense that we know where structure is. Until another point of structure forms, we don't have to worry too much about that. And that just gets more into our plan. And again, in the live session, even later today, we're going to touch on things like this that you guys can clarify this a little bit more.
Yeah. So I think that was a great explanation, to be honest. So we can just go on to the next one. How many accounts have you blown up, if any, before starting to make a living from Forex trading? So I can take this one.
Yeah.
Just to start off. So early on, it took me about a little over 2 years, like 2.5 years to become profitable. And that was just because I didn't have a mentor. I didn't have a community. I was kind of just learning from, all over the place, and I was off and on because, I blew a couple accounts early on. I blew 3 accounts total. So first off, it was like a $500 account. I literally blew that in like 3 trades, literally just wiped out the account in like less than a week. My first week of trading, lost $500. Because again, I had no sense of risk management. Second account, I thought I just needed to have more capital in the account, but I could use like same size lots and stuff, lot sizes. Same exact problem. I didn't learn my lesson. I lost 2,000 that time. And, then I was just starting to doubt Forex in general. I thought it was like a sham and like only so many people can do it. So I actually took a break from trading. I think I took about a month and a half off of trading. Then I came back to it. I put 3K in, and then the same thing happened. I lost 3K again. So I took another month off, and then I came back, and I had a whole different perspective. I'm like, all right, I'm either going to make this work or I'm just going to keep blowing accounts. So like something's got to give. You can't just keep doing the same thing and expecting a different result. That's literally the definition of insanity. So I need to change something. I needed to focus on risk management. I need to focus on what I'm doing wrong, why. Even if I'm losing trades, my account should be able to sustain some losses. Because again, as our strategy proves, you can have only a 60% win ratio and be extremely profitable. You don't need to win every trade. You just need to have sound risk management. So, I mean, it took me. So that was 3 accounts blown in the first like 2 years roughly. Off and on. In between, I was on like a demo account in the first year or so. Kind of just figuring it out. And so 3 real accounts. I think that was like 5,500 total was lost in the first 2 years. But I mean, consider that's the price of learning. And then you get through it. So risk management is so key. So that's how many I've blown. Angela, have you blown any accounts?
Yeah, no, I've probably blown like 3 or 4 accounts, smaller accounts. I blew one like larger account. It's it's tough. Like Nick said, it took me around like 2.5 years to really start to understand like risk management, have a real edge. And again, I mean, a lot of the problems that I had was the lack of just like transparency and who I was learning from and just education. And I learned from someone who benefited me a lot in the sense of like how to look at the markets, but like a risk management, like maintaining orders and stuff like that. Like there was still a lot for me to figure out. And that's why me and Nick kind of came together at one point or another. But yeah, I mean, I blew like 3 or 4 accounts, like Nick said, over my 2 years. I think at the most, I probably took like 2 months off from trading, which is a long time.
It
Re-
is. It is a
Realistically,
long
it's a long time. But I was really pressing, like to learn. Like I was really going at it. So sometimes it's necessary. So if you're feeling overwhelmed and you've blown an account, the best thing you can do is take a break. Because, like Nick said, I took a break and I remember I came back and I just looked at my phone and I literally marked up a chart. I wasn't thinking too much. Like I just went with what I knew, and I marked up a chart and like just trusted my analysis a little bit. Because the big thing is like, you got to get confident in your analysis. Like, you got to get confident that you do have an edge in the market, and inevitably the best way to get confident is to make money, obviously, because that'll solidify it for you. But you do got to get confident in your analysis. And for me, I took a break. I came back. I had different expectations, and it's just failing. Like after you fail so many times, and that's when you're gonna stop following these people that say you can flip accounts for 1,000,000%, and that's when you try to start. I was like Nick. I came back and was like, whatever way I need to make this happen is how I'm gonna make this happen. You know what I'm saying? Like whatever it takes. And that's why, when I found out about FTMO, like that was like, wow, like someone just shined a light on like something I didn't even know was possible. Like that's why we're talking about it so much, because for you guys that are you guys that are starting off, like you should just trade a $500 account and you should trade 1%. And your goal should be, instead of funding more money, like just pay the FTMO and get on game with them and like get on course with them, so you can start to build capital. And not only that, like you're gonna build a reputation if you can trade on a firm and you got your
Absolutely.
data there. And like so just always try to. There's a lot, and just don't be overwhelmed. But yeah, I did blow like three or five accounts. So let's go to the next one. How do you know where to set your sell, buy limits and stops? I put this in here because we don't actually use buy limits and stops.
We
Um,
do it all manually.
yeah,
As we see the execution happen, we like to do it manually. I won't ever, yeah, Angela won't do it. I won't do it, set anything and then go to sleep. And like, as it hits it, I won't do that. I
no,
want to read price action. I want to read what the market's telling me. I want that data in front of me. And I'm not going to leave it up to, some limit or stop to,
that doesn't mean that that's wrong. You know what I'm saying? That's just not our style. We trade. I want to see price action close. And for me, that's a concrete, my idea is being solidified. I will say this: my first trade I ever took, I made $900, which was ridiculous, and I put a buy limit and woke up in profit. And I just think personally that that's just not good. Like I just think that you don't know what's really happening. You're putting a limit on there at a price where the decision. I don't know. Like I don't know what people that use buy and sell stop limits. Like I don't think there's anything wrong with it. It's just not our style.
right. Yeah, it's not. So
Yeah.
let's see number 7. Is it wise to continue using signals that aren't going in your favor? Um, well, yeah, I think that's kind of self-explanatory. If you're losing money with someone's service, whether they have good signals or not, if things just aren't lining up and you've tried them out and you've been with them for quite a few months and you're just not seeing anything come of it, then yeah, stop using the signals. I mean, things have to line up. If and also you have to kind of address the reason why you're taking signals. Are you taking signals because you're not quite confident in the market yet? Are you taking signals because you think they're a better trader than you? There's certain questions you have to ask yourself, and then you have to address those problems or those questions. I mean, what would you say, Angelo? Would you
Yeah.
continue to use signals if they're not going in your favor?
Well, I would say like that question is, I'm gonna address it as though like you're in a signal and it's not going in your favor, like as in you're in a trade. I agree with everything you said about like, obviously if you're taking signals and they suck, like you should obviously stop.
Right. Oh,
But
yeah, I see where you're coming from too,
if
which
you're
is
in a
also
yeah, if you're in a signal and it's not going in your favor, like you're in a trade, you gotta, as at least for us, like we have the chat for a reason. Like we are going to continue to update you, and we're not going to exit the position. We're operating without emotion. We're operating with a plan, So until the structure is broken, you guys got to realize, and this has happened so many times in our signals. I remember with AJ, GU, like NU this past week, like it has gone into drawdown. Like you guys can't be afraid of drawdown because the reality of it is when you put on the risk, when you put on the trade, that's it. You know what I'm saying? Like you are already putting yourself in a position to either, reap the rewards or the risk. You know what I'm saying? So unless something happens where it consolidates for 3 days, and like I know that all trades I take we'll go over cut losses early because that is the most misconceived phrase in trading. Um, you know, when I put on a trade, if it plays out for 3 days and I know all of my trades normally play out with 2 to 3 days. If it's going over 3 days and then it breaks minor structure, like then I will cut my loss early.
Right.
You know what I'm saying? Like I'm not just cutting losses early when I'm taking realistically, I'm taking an intraday move that I'm trying to turn into a swing trade. I know every single trade I take, because I back tested, takes 1 day, or I'll say 12 hours to 2 days or 3 days to play out. So why am I gonna cut my losses in the first hour? It
Right.
makes zero sense.
None.
It makes
And it's
zero
actually,
sense because I'm not letting the trade play out realistically.
right. And you're actually letting emotion get the better of you in that scenario, especially when you have that information already. You know it takes X amount of time for your trades, the way you trade, to play out. So why are you letting emotion, dictate what you're going to do in the first hour? Especially since you put all these hours of preparation into this, you have confidence in the analysis, then an hour later it all goes to shit. It's more of that's a you problem at that point.
Yeah.
But this is actually funny to add to this. On Friday, we were talking about this topic exactly. I took a short on AJ. It goes into profit. The next hour it pulls back to my entry. And I'm on the phone with Angelo, and I'm like, "Oh, nice! It's pulling back to confirm a lower high. No problem. Like I'm more confident than I was even at entry at that point. It's simply just coming back for a retest. It's not. I'm not going to consider cutting my losses. It was literally the first hour of a trade. It went into profit, came back for a retest, formed a lower high, and then continued to drop. So like it's all about having confidence in your analysis, understanding market structure, and understanding why you took that trade in the first place. If you were going to abandon it an hour later, you shouldn't have even taken the trade.
Yeah, like come on. So, like Nick said, if it's pulling back and it's within structure, you guys, the mentality that you have where you're wrong, like you got to cut that shit out
Yeah.
because that's a lack of you being not confident in your plan. It's just lack of experience.
Yeah,
Just
that's
straight
the
up
best.
it's just straight up a lack of experience. Like the trade will never go 1 million pips south or 1 million pips north. Like it will always form structure, guys. You just got to have a plan around that structure, like how to categorize those lower highs and higher lows when you do get into 1-to-1. Like this is all like I'm talking just in words of my plan. Like when I do get into 1-to-1, where am I going to move my stops? Am I going to use my fibs? Am I going to use 618 to then like raise my stop loss higher, put it into profit? Like you know what I'm saying? It all just comes down to gaining experience around the way that you trade. And I think what's different about our signals, at least the way that we envision them, is that most people that are taking our signals are in the course. And the signals comes with the course if you just buy our signals anyway. So the goal is for you guys to learn. Like the goal is for you guys to look at the trade. We are taking the trade. Like we're as transparent as it gets. We do live sessions every day. Like we're taking the trades. So you guys know where we're exiting. You can look at the signal. You can go back, and you can paint a picture of what we were thinking. But I think that's a future question. So let's hop on to the next one. How many years have you been trading? What is your confidence level?
All right, so I've been trading around. I'll take that one first. I've been trading about 6 years, and confidence level. I don't know if there's an exact scale of confidence level, but I know every single trade that I get into, I have 100% confidence in because I've taken the time. I've done my due diligence. I've waited on this position to play out. It's a high probability trade. It fits all my rules, and I won't take a trade unless it fits all those rules. And then, obviously, I'm extremely confident in every single trade that I take, whether it's a win or a loss. It's set up exactly. It's followed my rules. It's in line with my strategy. I'm not doing anything that's abnormal according to, what I've had success with through my experience. So, I would say, yeah, pretty high confidence level when it comes to taking trades for sure.
Oh yeah, and for me, I've been trading now for 2.5 years. like Nick said, I put in a lot of work to get to where I am now. And what is your confidence level? My confidence level, I think it speaks for itself. We give signals, we go on sessions, we do live sessions almost every single day. Now we're doing FTMO accounts. Like, you could say that we're fairly confident in what we're looking for. And it was not always like this. I'll tell you that. It was not always like this. And I will say that, there is a lot that you got to go through internally to get to this point. It's not just about learning the patterns and the candlesticks. And I was even listening to this podcast, Chat with Traders, and, this newbie trader was talking. It's not all about the candlesticks and the patterns and everything. You could know everything, but it's more about the emotions, like being able to handle the emotions and kind of knowing who you are, like when greed kicks in, when fear kicks in. Like, you gotta know you can't change that about who you are. You gotta just flow with it and use it to your advantage. And like we and Nick were saying, like, when structure is just forming, like, if you're of the notion that this is, I'm gonna be wrong on this trade, like blah blah, that is very negative. You know what I'm saying? Like, that means that your belief in your system is very low.
Yeah.
It's very low.
In which case, you got to kind of evaluate yourself, and you shouldn't be taking some trades if you have that much self-doubt and, your own analysis and so
I
on.
will say this: whenever I get in, like, I've found that this happens a lot for me now when I'm in profit. If I'm in profit, like I'm around 1.5 in profit, 1.5 times whatever, like 1.5 reward, and I'm coming to a level and I'm unsure what to do. As soon as I become uncertain, unless I can go back and like find some data, like I did this on GU last week where I really looked at how price formed recently. If I can't find that, as soon as I doubt and just I'm hoping that something happens, I would just exit the trade.
Yep.
As soon
At
as it
that
happens.
point, emotions already infiltrated your mind. It's too late at that point.
Exactly. So
That was
let's
a
go
great
on
question.
to what is your entry strategy? I'll go with mine first. My entry strategy is, and again, teach us inside the course, daily, 4-hour, weekly. I look for structure. My entries are all on the 1 hour and the 30-minute. I will always enter on lower highs and higher lows. How do I categorize lower highs and higher lows? I use the moving averages, guys. When the moving averages are crossing on those lower time frames, combined with price action, bearish signals, and bullish signals. So bearish engulfings, you know, bearish variations, evening stars, morning stars, bullish variations. That is how I enter every single time.
Yep. And I'm pretty much exactly the same. I mean, I'll do the top down analysis. I'm taking entries on 1 hour, 30-minute, lower highs, higher low entries only. But I guess I'll give you a perfect setup. I like entering on a transition. So you get a key reversal, and then you get the first higher. Let's say I'm shorting. I get the first lower high after support was broken and then retested, and I'm looking for tons of confirmations. So that's basically very, very similar to, we have very, very similar entry strategies when it comes to that. So, yeah.
Right. So let's go to the next one. How to know when a big move is a fake out? Don't get faked out, bro.
This is a good question. Really
Yeah.
good question. So a lot of the time it's news. This is also a big reason why we say don't trade news, is because oftentimes news accelerates the trend, or it'll create kind of false market conditions. So it'll make you seem like, oh, there's so many buyers, because this positive news came out. And then in that hour, you'll see a huge spike, and then it comes right back, leaving a giant wick. That's a news fake out. You know what I mean? Like, it's unrealistic, unsupported by anything other than speculation. So that's one type of fake out. Another one you can consider fake outs, just a quick, like, kind of like a ripsaw. Like, it'll close beyond, let's say, it'll close beyond resistance and then pull right back. That's a fake out. It's very similar to stop hunting, which is, you'll see, someone pump an asset and to make it look like it's breaking either a lower high or a higher low, where a lot of stops would be. So that could be considered a fake out as well, but, more or less just stop hunting. There's a few things you want to consider. So there's high times of, volatility. You just got to be, and some pairs do it more than others. Some pairs will fake out a lot more. And that's why we always recommend, more basic pairs, slower moving pairs like AU, NU, USEF to start. And then you'll see a lot of fake outs happening on, very volatile pairs like AJ or EJ or, UCAD at times. So, yeah.
Yeah.
Interesting.
So for me, I'll just bump up. If there's like a big move on the 4 hour, I'll just bump up to the daily, and I'll look at daily structure. If daily there's a big move, I'll bump up to the weekly. Um, Everything like that. It's the difference between market maker and ECN broker. ECN broker, when you enter the trade, it's more of a true price. Like it's more accurate. Um, I've always used ECN. Now I just use like FTMO, market maker. I don't even know, to be honest.
But that I want to come back real quick to what Angelo said about jumping up timeframes. That is a huge, huge tip. If you see
Yeah,
some sort of spike in volatility on the 1 hour, or something, or you're unsure, or things start to pick up, or you're seeing a lot of, you just volume come into the market, jump up timeframes. It gives you a broader perspective, guys. I can't tell you how many times that has helped me see things clearly. Just when you're unsure of something on a lower time frame, jump up time frames. Even on a 4 hour, go to a daily, and so on. It just gives you that broader perspective. It kind of makes you feel calm when you jump up and you're like, oh, I see it clearly now. Jump around the time frames, utilize them. They're there, guys.
definitely, definitely. All right, so let's go to the next one. When trading, how do you start thinking like the banks? This is a good question. I can cover it for now.
Sure.
I definitely, heard a lot about where the banks enter orders and, thought like a lot of people mentioned that you want to trade where the banks are. The best way that I can assimilate our strategy is you see my monthly and weekly key levels. Those key levels are always placed at points in the market where there are huge reversals, huge support, huge resistance. All of those reversals mean, if you guys are trying to assimilate it into like some sort of logic, is that at that price point, a lot of orders came in and flooded the market. What do a lot of orders mean? A lot of money. You know what I'm saying? A lot of money. So those are most likely price points that banks, big like companies, like they're trading those prices. And that is why those monthly and weekly moves are so aggressive off of those levels, because inevitably if price comes to 100 and bounces to 200, from 100, that price was when it was decided that that move was going to begin. So a lot of money came in to start that reversal. You know what I'm saying? So how to think like the banks is just place your key levels on the higher time frames, on the weekly and the monthly, and see how well those levels become respected. Like I can't stress this enough on their live sessions how often we're seeing price come to these levels, and I'm just saying like, okay, we're bumping up to the weekly. Now we're looking for reversal, and I'm looking on the 1 hour for like transitions, because inevitably those key levels are where the volume is, and we want to be where the volume is. Like we're as soon as they come to those areas, I am getting ready. Like I'm so ready to take trades, because that is where a lot of bigger people are placing orders, and I can hop in on these lower, like Nick said, lower time frame transitions, and very easily find moves.
Oh, absolutely. And this is a really great question, because it's, banks and institutions place large, large orders. So you'll often see once it hits, one of their levels, or once, price action crosses a threshold where, there's a lot of orders sitting, you'll see a huge reaction. So I actually have a lot of experience with this, because I got really into order flow trading. So I would peek at all these brokers, where all these orders were, where all these institutions were placing their levels and such. And it's very nerve-wracking, because you're constantly on edge, especially when you're waiting, for price action to trip those orders and shit. It's very nerve-wracking. But there is one thing that I took from, I don't trade order flow anymore. I'm pretty much just all price action. But there is one thing that I did take from that order flow trading, is that these institutions love placing orders at whole numbers, large whole numbers. So again, to add on to what Angelo said, when you see us do our, monthly support and resistance, weekly support and resistance, I'm always rounding off. I'm always rounding off to a nice whole number, a nice round number, because I know there's, coupled with our technical analysis, there's a very big chance that there are a lot of orders sitting at these levels. And, through our experience, through tons and tons of hours of back testing, this has been, pretty consistent, and it's worked out so far for our strategy. So that's one thing that I'll do specifically, is I always round things off, always make them nice whole numbers, because that's where a lot of, if you get into order flow trading, look into it a little bit. You'll see that these institutions always place huge ass orders at whole numbers.
Yep. Let's go to the next one. How do you know if you should exit a trade? Again, structure. we exit based on breaks of structure, or if you make it to a TP. If you make it to a TP, you're up 2-1, risk reward, you're up 3-1, then you can comfortably close. So I always wait for structure. I wait for a lower high or a higher low to be not tested, broken. So I'll wait for the following candle to confirm. And that is when I'll exit trades. I try to make it easy for myself. I don't, when prices moving past the lower high and it just made one and I just entered, like, I'm not gonna stress myself out and like look for 5-minute double bottoms. Like, no one gives a shit. Like, it's so bad that people exit on that stuff. Like, you need to just say, okay, I've entered on this lower high, I've entered on this structure point. I am now anticipating, based on how I've back tested, based on how I've planned out this trade, the next lower low to be formed. That's why you entered the position. Don't forget that. You entered the position to make it to that next point of structure. And I struggled with that a lot too in the beginning. Don't get me wrong. Like, I'm talking about it now like this, but you gotta, set rules like 1-to-1, move stops to break even. Why am I moving stops to break even? Oh, I bring on the fibs, 618 is there. Oh, this is a resistance level, something like that. Like, it's always gonna kind of be the case about how I form my plan. And until that's broken, I'm not even looking at the chart. You know what I'm saying? Like, I'm not watching the chart every minute. You guys do this and gotta stop. Like,
Yep.
if I'm literally in a trade and say it's close to my stop loss and it's at the structure level and it's like 30-minute structure. Like, it's not close to my stop loss, but it's testing structure. And I need another 30-minute candle to close. Like, I will literally say it's 7. I will say, oh, I don't even need to look till 7:30. You don't need to look until it closes.
Nope.
You know what I'm saying? Like, you don't need to watch the candle go up and down. You just need to look for the next candle. Closes. Okay, now make a decision. So this also comes down to, like, people ask the question about what sessions to trade, stuff like that. Like, you guys got to just, if you're waiting on 1 hour signals, 1 hour setups and entries, if another 1 hour candle needs to close, and like, go outside, like, go to the gym, like, eat food, like, go hang out with friends. You know what I'm saying? For 1 hour, and then come back and you could check it on your phone, or you could just come back into your room if you're in your house, check it in your room. You know what I'm saying? You don't got to sit there for the 1 hour. It's like torturing yourself.
Yep. So I think that's a great explanation of when you should exit trades. So next one, number 13, best fib levels. Guys, if any of you have joined any of our live sessions, you guys know we love the 38.2 and the 61.8. We call them our golden zones. It's typically where we'll get the best entries, where we'll see structure form, and then we'll get, great risk rewards. Those are the golden levels. That's what I specifically look for, those two levels.
Yeah.
I mean, you can trade off some of the others, but again,
That's pretty much it.
Yeah, those are the golden levels.
Too. All right, so why do you use a high? I thought this question was interesting. Why do you use a high stop loss without considering people with a small account? So, again, why do we use high stop loss? We're always putting our stop loss outside of structure. It's part of the plan. You know what I'm saying? We're always going to use structure to our advantage. That way, when it is in drawdown, we can rely on something. We can rely on the fact that if this level is broken, then we're not in a trend that we want to be in. For you guys with a smaller account, you gotta, it's just like we talked about. It's worry about the 1%, worry about the 2%. If you have a smaller account and you're worried about the stop losses are too tight, the risk rewards aren't that much, like, you guys got to kind of check yourself. Like, don't be greedy. You know what I'm saying? Like, don't be greedy. I had someone like message me. They're trying to tell me like, oh, this guy shows how to enter with tighter stop losses. Like, we have a system that works, guys. We have a system that works. We're constantly refining. Don't get me wrong. We're constantly refining and looking for ways to improve our edge and everything like that. But when you find something that works, guys, you got to realize, like, you slightly improve upon it. You don't completely change it. You know what I'm saying? That's not the right thing to do.
It's true. And also, this question was asked by somebody who's thinking in terms of pips, because a stop loss is kind of irrelevant. You're always trying to risk 1 to 2%. As long as your risk to reward is there, it's a good trade. I don't give a shit if I have 100 pip stop loss. If I'm aiming to get 200, two to one risk reward, and I'm risking 1%. It doesn't really matter what your stop loss is.
Yeah.
I'm going for percentages. That's
Yeah, that's
how.
why you guys want to take, because you want your margin to be better so you can put higher lot sizes. I get it. But we're not teaching that way because it's not the right thing to do. It's not the right thing to do. It's
Not
not how you
sustainable when
it
you're
doesn't
thinking.
it doesn't promote longevity. If you guys want to trade for a career, if you want to trade and replace your income and get funded, like it's about 1 to 2% risking. It's not about risking half your account and then like having a tight stop loss. Like, come on, it's not the truth. Um, yeah, 100 pip stop loss, 30 pip stop loss, the same percentage we're risking, guys. So it doesn't matter what the stop loss is. You know what I'm saying? That's why we recommend to use the position size calculator. We use this on every single trade. I don't change this 2%. I only change this if I am entering a trade on a pair that I don't normally trade, or if I'm scaling in to a position, or if I'm entering in, again, just a position that is a different style than what I'm used to, I'll lower my risk. I know when I need to lower my risk. When I'm going straight to my plan, I will always risk 2%. So let's go to the next one. How many pips do you average in your signal room weekly?
This is a good question because it kind of adds on to what we were just saying.
Yeah.
It's not about pips, guys. Think in terms of percent. We've been consistently doing 10% for the last few months. So if you want to break it down to weekly, it's 2.5% a week, which is incredible, to be totally honest with you. Pips don't really matter. Again, yeah, it's all about percentage because the real answer is how much is your account going to grow? That's really what this question is geared toward, and that's 10% a month based on what we've seen so far in our signal room.
Yeah, also consider the conditions we are in for this year. It has been a year where we've had to adjust. Our stop losses have had to become wider because of the volatility at times. You know what I'm saying? So that's also something to take into consideration. But what I will say, like Nick said, the reason why pips don't matter, guys, is because on AU, you could enter into a 4-hour swing trade. Your stop loss is probably going to be like at the max, like 40 pips. And you're just trying to enter on the 4-hour, trying to swing trade into the next lower low. That same type of trade, 4-hour trade on GJ, your stop loss is probably going to be 100 pips. Your target's going to be double that, but it's the same idea. You're still trading on the 4-hour, but it's just because each pair has a different volume, different volatility. You know what I'm saying? So that's why the pips is not accurate. It's not true to the positions you're trading. It's all about, like we talked about, risk, 1 to 2%, manage the account effectively. I promise you that if you risk 1 to 2%, at the very worst, if you lose 10 trades in a row and you're risking 1%, you'll be down 10%. That's a lot better than you risking 5% and then being down 50% of your money. You know what I'm saying?
That's
Like,
a lot harder to recover from.
yeah, and just think about the psychology behind your situation then. That 10% you went down, maybe you can afford to replenish that account and get back to zero and then start over again. Maybe that's what you want to do. Or you just step back and come back in for that 10%. That next trade, maybe you make 2%, and you're closing in back to zero. Like, just give yourself a chance. Give yourself a chance. I only say this because we've been there. I've been there and I felt the same way.
Yeah, he's very passionate about this because, again, yeah, if you're using 5-10%, you lose some trades, you're literally shooting yourself in the foot, and you're hindering your entire process. It's not good. All right, so let's keep going here.
Yeah.
What qualities do you think make a good trader? I think what makes the best trader is someone who's open-minded, willing to learn, and can adapt to different market environments. So again, like as Angelo and I just explained through our stories of trading, how long we've been trading, we both tried different things that didn't work. We took breaks. We kept coming back. We were resilient enough and open-minded enough to realize that we were messing up. We needed to change some things, adapt, and pursue and push through basically those challenges. I mean,
Yeah.
What would you say some of the best qualities are?
I would say that if you're someone who, you got to be persistent. You know what I'm saying? You got to be persistent, and you have to be someone who, when you make a decision, you have to be decisive. Like, that is your decision to become a trader. Like, that's got to be it. Like, you're then going to become a trader. You know what I'm saying? Like, that's step one. Then it's like your decision to swing trade. Like, that's step two. Your decision to enter in this way. Your decision to look at structure on these time frames. Like, no matter what you see on the internet, because I know you're going to go through a lot of periods of time where you're going to look at other people's analysis, which is okay. It's good to do. You know what I'm saying? But at one point or another, when you have enough information, enough experience, like you gotta look at your analysis and you gotta say, no matter what, like he says this, but I say this because this is what I look for. Like everyone can look at the market a different way.
Yep.
No one's exactly right and wrong. So I'll just say, qualities of a good trader, got to be persistent, you got to be confident. You got to be, at the end of the day, you got to be willing to lose and you got to be willing to lead. You got to be willing to lead yourself. You got to be a leader. That's the cool thing about trading is like everyone wants to be a leader, but some people don't have the qualities to really lead people. But like in trading, you can be a leader. Like you just lead yourself. You know what I'm saying? So that's also something that's pretty important. Have some leadership qualities in there as well. So let's go to the next one. Will signals make me successful in the long term? This is a very
So
good question. You
yes.
could start. You could start off.
Before our community, I would answer this question very differently. I would say no, signals will not make you a great trader. They will honestly prolong your journey from getting to the point where you want to be. But that was before our community because we've geared it in a way. If you can learn from signals, if signals actually provide, you know, provide something for you other than just profit, like if you can get value out of it, if you can learn why these trades are being taken, if you're being guided through them, if if they're providing analysis that you can compare your own to, then that has a lot of value. Then yes, I would say they could make you a successful trader because you're seeing professional traders take real trades, setting them up, explaining why. And that's exactly what we do in our course. That's what I'm saying. Before our community, I would say no, but we've seen that it helps, and people have learned so much from just our signals room alone. Not even taking the trades, because you get it with lifetime membership. I've seen people be like, "Oh, these signals help me so much. I'm not even taking the trades, but they're providing so much value to me. I can literally see every single step breaking down a trade, and it's enhanced my my trading dramatically."
Yeah, so obviously Nick's perspective has changed. My perspective has always been that signals can be beneficial. At first, I was of the notion of I'll never take signals, and then I also switched up because I think signals is important because one, if you're just blindly taking signals, honestly, at the end of the day, if you take a signal, it can help you build some confidence. At the end of the day, it can help you build a little bit of confidence. You're getting onto positions, you make a little bit of profit. Then it promotes you to look at the charts, to break things down. Like Nick said, like it kind of just promotes. It motivates you. It motivates you to say like, okay, I'm seeing these guys take the trades. I want to see how they're broken down. And then that's why we took it the way we did and made our signals the way that they are. Is you have the free analysis in the analysis group, and then we have premium analysis, which is our lower time frame structure, lower time frame potential trades, and then it builds up to the signals is when we give the entry and the take profit, stop loss, and we drop a chart with that. It's the thought process behind that is if someone can see from the point, because you always want to, when you're looking for a mentor, when you're looking for a group, you want to see levels as to how they're thinking. And if someone can see a trade all the way from the point where we break it down on the weekly time frame, all the way to the 1 hour, 30-minute, and then the entry is literally highlighted, like I'm sorry, but you got to be able to learn from that. You know what I'm saying? There's so much value in that, and it's broken down step by step. And a lot of people don't realize that kind of until they're in the group. It's so hard to market that and to talk about it. Once you get in the group, you can kind of see more about what's going on with that. So, like Nick said, if you're just taking signals and you have you got no like motivation to learn how to trade, like you just want to take signals, like whatever, like, that's a completely different story. We're gearing this towards people that want to be Forex traders, that are using this to get over a bump, get over an obstacle, get themselves into a different position. That's who we're talking to right now. You guys that just want to take trades, I mean, you're on a whole different scale. Like you're in a whole different ball game. Like you got a lot to figure out at that point.
Yeah.
So let's go to, if I have the last couple of questions here, we're making good time. If I have the slightest doubts with your signal, should I still take it and why? What I will say is if you're having doubts about the signal, which means that you're looking at the analysis, you might have a different analysis. That's honestly very positive. That means that you're trying to start to make your own decisions and you're trying to push through. And what I will say is I try to say this to all signals. I mean, the way we've been running signals lately is like if you take all of our trades, you're gonna make what we put on YouTube, the 7 to 10% a month. That's the reality. Like if you do take all of our trades, that's what's gonna happen. If you decide to look at signals and you're leveled up a little bit and you wanna use it as a just as a learning tool, then what you should do is when the signal comes out, you should have your analysis ready on those pairs, like all the pairs that we do, compare to your analysis, be like, does this make sense? Take an entry. And then you could take like either take the entry if it lines up with your analysis or you don't. And there's no problem because you're on a different level at this point now. You know what I'm saying? You're getting closer to where you need to be independent at the end of the day.
That's a
Yeah.
good point. Very good point. So, all right, next question. What is a key point that separates beginners from intermediate traders? So, I mean, other than the obvious, technical analysis knowledge, I would say emotion. Because if you're a beginner, you pretty much have no emotional experience with trading. Intermediate traders, do. They'll have some sort of control. They'll be aware of what they should be feeling, how they should be feeling when entering a trade. They'll have some confidence in that, in their own analysis and so on. So I would say, yeah, emotion is definitely the biggest thing that separates beginners from intermediate. What
Yeah.
would you
I
say?
mean, I agree. It's all just psychology. You can learn fairly quickly technical analysis, and then it comes down to time frame correlation. Understanding you're building a strategy around that, and then back testing is going to take time. I'd say the difference is an intermediate trader has spent a lot of time on the charts. They've back tested pretty thoroughly all the pairs they're looking for. They have a very um, maybe I'll say an intermediate trader is someone like if you ask them what they're looking for and just tell them like, can you break down this chart for me and tell me where you're going to enter? Like they will be able to run through that pretty quickly. If you can't do that, then you're still a beginner. You know what I'm saying? Like if I ask you like, what do you look for? And you're like, I might enter here. I might enter there. Like I might move my stop loss. Like you're still learning. You're still a beginner. You cannot possibly be consistent with that indecisiveness around your strategy. Yeah.
That's a good point. That is definitely a fine line, though. Absolutely. If you don't know what you're looking for, and you're just kind of just like going at the market without really any clear direction or strategy, then yeah, that's
Yeah.
definitely the fine line, I
So
would
for
say.
you guys and people ask like, oh, why do people start Forex courses and stuff? I mean, don't get me wrong. There's some people that just make a course, they don't even interact with their members, and they're shot. Us, we are doing live sessions every day. We're updating analysis every week. We're putting in work that realistically benefits ourselves as well. The only way to master anything is to teach it, guys. Like if you want to go back to whatever martial art, like teach and preach what you know. Like the only way to master anything is to be able to teach it to people. So what are me and Nick doing? We're just gaining experience. We're constantly reviewing very basic concepts so they become so solidified. So if you're a beginner, like trying to get to that intermediate level, like start to interact with other traders, like maybe set up a session with another trader, maybe come on our webinars if you're in the course and say, hey, can I share my screen and look at what I'm talking about? Because that's going to start to put you over and it's going to drive your confidence like through the roof.
Just to put things into perspective for you guys, when Angelo and I linked up, we would literally spend at least 20 hours a week on the chart, on Zoom, in person, going over stuff, going over basic stuff, going over what he knows, what I know, what I'm looking for in this setup,
Yeah.
different analyses, and so on. Guys, I just link up with other traders. That's really what, again, yeah, what really helps.
Yeah. We were literally back testing almost every single day for like 6 months, like 3 hours a day.
Yeah.
You know what I'm
We
saying?
were
Like,
going ape shit.
yeah. So you guys gotta level up, get together with people, start to talk about what you know. Like that's what I'm saying. Like with baby pips, like people are like, I'm gonna review baby pips. Like baby pips isn't charts. Like you know what I'm saying? Like it's not a chart. It's you reviewing like definitions and like factual knowledge about Forex and some patterns and stuff. Like get on the charts, guys. Like you don't need to win an argument about Forex. You need to win a trade. You
Wow,
know what
that's
I'm
a quarter
saying?
of the day right there. Quarter
Yeah.
of the day.
You can't say that enough. You can't say that enough. So you guys that are spending 3 months on baby pips, cut that out. All right. So let's go. Last question here. So which account balances do you recommend at least to try your signals properly? I kind of put in our results post. I think the lowest is like $200. I would say have at least anywhere from $200 to $500 in the
It
account.
also it also depends on what you're trying to get out of the signals. If you're approaching our signals like I just want to make money, then you obviously want a sizable account. You want 500 to 2,000, whatever. But if you're using our signals and you're also in the course and you want to use the signals as a learning tool, then yeah, you could use a couple hundred. Start feeling, get some experience from it, feeling some confidence in the market, developing that skill that we keep talking about. So yeah, it depends on what your intentions are with our signals.
Yeah, like I'm just gonna pull up really quickly. If we just look at our signals results for May of 2020, and as always, we do this, recommend the risk on every single trade. This is what you would have made with every account size. So 500, you're making 10%, you're going to make $50. 2,500, 250, 5,000, 500, 1,000 on 10,000, 25,000, 2,500, 50,000, 5,000. That's why the FTMO thing is so huge, guys. If you do get that 100,000, you're going to start to make enough to realistically replace your income and then some. You know what I'm saying? And then as always at the bottom, I do a little like if you guys want to do bump your risk up and risk 5% on every single position that we give out. Obviously it's on you. We don't recommend to do this, but it's gonna obviously hike up the percentage of what you win a lot more. And then on 500, 300, so on and so on. So those are going to be, back to the question, what account balances should you recommend? It depends. If you're just trying to take some trades, make a little bit of profit, on that $500, you'll really make back like the monthly charge, you know what I'm saying? Like on that. And then your goal should be to learn. Your goal should be to learn from everything that we're doing and to take the signals, unless you do have a larger account and you really want to, go that route. I mean, that's completely up to you. I've seen some people do so many different things with signals. And yeah, so that is the final question. Just to end it off, I just want to pull up if you guys do get our signals, everything that's going to be included in this. We're going to include this little short course for you guys where we give you guys our trading plan. 35 plus pages. That is pretty much everything that you guys need to study. You're going to get a little introduction, how to do lot sizing, which is obviously probably the most important thing. Every time frame, our analysis, entry strategy, fundamentals. We have a full course just on fundamental analysis, and then you could tell them a little bit about the Discord and what they're gonna get in there. I'm just gonna pull it up.
If you want to pull it up, just pull over, side over. So it's like a three-part. So signals is kind of like a three-part thing, not including fundamentals. It's actually four-part if you consider fundamentals. But essentially, as we talked about earlier in this webinar, the premium analysis is where we'll post those lower time frame setups that kind of play onto our Sunday Market Blitz, which is the 4-hour and daily. This is where we'll post the 1 hour, 30 minutes, kind of gearing you up, getting you ready for that time of execution. These are trades that are very close to execution. We're literally a couple confirmations away from an actual trade. And then once those execute, we'll drop them over in the signals channel. With, again, the amount of risk you should have, the stop loss, take profit levels, and a chart. And then, we'll keep you guys updated, throughout here. And also in the, signals chat itself. We'll keep you updated with what's going on, maintaining orders, what to do over the weekend, how we're, managing these positions and so on.
Yeah. So we have a chat where you guys can talk, amongst yourselves. This week you just brought on recently. Then we just have a one-way chat where I just kind of post updates about the results for the week. We got trade reviews. So every single week we'll break down every single trade that we won and talk about entries and everything like that. That's also in this course at the bottom, weekly trade reviews. And then we have, this is just a bonus, the fundamental analysis. Every single day we're going to post for people that want more background on fundamentals. We're going to post everything that has to do with current news updates that are coming out for that day for different pairs. So
we'll do a whole weekly analysis, present that to you, and then each day we'll give you two, updates as they, are relevant. Yep. So that's just the signals package. So there's all that's included, so much, it's all broken down, pretty easy to follow. And, as you can see, it's very clearly geared towards, educating you as to, why we're taking these trades.
Yep.
And we're not just blindly sending out signals for you guys.
Yep. And, we do offer, it's a monthly charge, 75, but if you guys, we run this promotion every now and then, and it's 149, just a one-time fee. So if you guys are interested in the signals, if you guys want to get involved, it's just going to be 149, one-time fee, and you guys get access for life, everything included that we just went over. And obviously, we just went over a lot of questions here. So we hope you guys took that all in. And, we look forward to continuing to just put in the work. Me and Nick are obviously very excited with what we're doing here at Forex League. So we hope that you guys can benefit from this.
Yeah, absolutely. Keep showing up, guys. We'll be here providing.
Cool. Sure. All right, so I'm going to upload this to YouTube afterwards. We appreciate all you guys staying on. We're gonna do the Sunday Market Blitz in 50 minutes, so we're getting onto the charts. So you guys definitely hop into that next live session, and we'll see you guys there.
All right. Thanks, guys.
Peace.